How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic I want to discuss with you, what is a SPIA annuity, also known as a single premium immediate annuity. Now, these are really good for the correct individual and really bad for the wrong individual. So one of the things that I try to stress in every single one of my videos is leverage, right? How exactly can an individual leverage an insurance contract, use their money, leverage an insurance contract, or leverage a specific income strategy to produce the most optimal result? Make sure that it correlates specifically to their ultimate goals at the end of the day. Um, and that's where SPIA annuity can essentially help you. But if you do not want to throw all your eggs in one basket in this single premium immediate annuity basket. What do I mean by that? Well, the problem lies with individuals. They come to the table, they're in their 50s, their 60s, their 70s, and they say, okay, I want to retire. I've accumulated assets. Maybe I've accumulated assets in cash. Maybe I've accumulated assets in my 401k account, in my IRA account, whatever that is. And now you essentially have these different buckets of money that's sitting there. Well, this individual understands that, well, they're not going to work forever and they want to retire. So rather than just utilizing pension income, if they are offered a pension plan, very few companies still offer pension plans or people have access to their pension plans. You have Social Security, which is another income source, and then anything maybe through any other sorts of residual income that you may be collecting. And what happens is when you tally up all these different income streams, they're obviously going to equal a total amount. And whether this total amount falls short of what your actual goal is depends upon how much you should be able to leverage into one of these insurance contracts, into one of these annuity contracts. Now, let's go with an example of a person that just has $100,000 of cash. Let's say that this person has $100,000 of cash, and after all their pension income that's coming to them, after all their Social Security income, let's say they're getting $5,000 every single month, which would obviously equate to $60,000 in a given year. Now, after this individual tallies up all their expenses, maybe the goal, maybe what they really want or what they really need to make sure that their goals match up specifically is an additional $5,000, okay, per year. Well, they have $100,000 of cash that's sitting there. So what exactly are the options for this individual to use this $100,000 and make sure that they're taking care of that specific income gap? Now, some individuals say, okay, listen, I'm going to take this cash. And I was talking to a wealth accumulation specialist, a financial advisor, and he told me, okay, listen, I'm going to monitor your $100,000. We're going to throw it into different types of mutual funds. And based upon our situation, based upon your situation, you have a good percentage, about an 80% chance that you're never going to outlive that money if you're pulling out $5,000 year by year by year, and we're monitoring these accounts. Well, 80% is horrible because the thing is you have to look at retirement as your livelihood. Only be concerned with what is contractually guaranteed to you. How safe are these contracts? You do not want to mess up because in retirement you only get one chance. If you take too much money out in a given year, then you have that risk of outliving that money. This is where a single premium immediate annuity can essentially help out and to help you obtain your specific goals. Now, if we understand that income gap is $5,000, and let's say this individual is 65 years old, they could either go the route where they have that big question mark and they're going to be pulling out their money, and they could hit a point in time in 10, 12, 15 years that they're going to outlive their money. They have no more money left in their bucket. Or if this individual doesn't have specific beneficiaries that he wants to leave that money to, if he's just only concerned with solely getting as much income as possible, you could utilize a portion of that $100,000 and purchase a single premium immediate annuity contract. And when I say purchase a certain portion, meaning that maybe out of that $100,000 for the 65-year-old, maybe it's only going to be $80,000 that that person would need to purchase a single premium immediate annuity for that single premium immediate annuity to pay him $5,000 of income for the rest of his life. Contractually guaranteed to the insurance company, $5,000 will come to him every single year. If he lives to 120, he's going to get paid $5,000. His $65,000 goal is still going to be met, making sure that he was leveraging the smallest amount of dollars possible, placing that money in there, $80,000, and now still leaving $20,000 of pure liquid cash as emergency funds. So this is just a very short hypothetical situation, but you have to understand, rather than have that big question mark in retirement, you could accomplish your goals by the use of leverage, by the use of leveraging your dollars to purchase specific contracts and have those contracts pay you a specific lifetime income stream. And it's based upon mortality tables. It's based upon the length of time that an individual is supposed to live. The insurance company. Now with the single premium immediate annuity, there's little nuances with it. So one of the things is it has to be owned through an insurance company. A single premium immediate annuity has to be offered through an insurance company, meaning that a bank, you can't go to your bank and say, listen, I want to have a single premium immediate annuity. It goes by a different tier, a different structure. Insurance companies understand mortality tables. They understand the risk of a male age 65 and millions of other males age 65. What are the chances that that person's going to, what is exactly that date that's stamped on their head on when they're statistically supposed to pass away? So they leverage those numbers, and they leverage fixed interest numbers to be able to take your dollars and provide that specific income guarantee. Now, why exactly is this important? How exactly can you use it? What are the cons to a single premium immediate annuity? Well, one of the things that I absolutely hate about SPIAs, and if you're only using the life-only single premium immediate annuity, understand you have different options where you could go and take it in certain intervals, but if we're just talking about the lifetime income only option, in that same scenario, let's say if you had $80,000 and we understood that 65-year-old male was now getting paid $5,000 every year to the day that he passes away, well, let's say if this person passed away at age 67, what happens? Well, single premium immediate annuity, this person essentially takes their dollars, surrenders it to the insurance company, and now the insurance company is giving them a guarantee of $5,000. So if that person pulled out $5,000 the first year, $5,000 the second year, they would have $70,000 that they did not touch. Well, unfortunately, now the insurance company keeps the rest of that money. So that's why when the insurance company understands the mortality tables, they understand the rate that somebody's going to be passing away, that's how they could leverage that to their advantage. So they could not only make interest off of the money and using the large lump sum to make interest off of buying, fixed treasury bonds and different things on how they set up their general accounts on the back end, but they also could make money on a single premium immediate annuity through those mortality tables. And that's how, that's how a lot of these insurance companies have really specialized on offering individuals single premium immediate annuities. I think it's correct I think it's right for the correct situation. I do not think that you should be placing a large bulk of money into a single premium immediate annuity. I personally like the hybrid annuity for that same scenario, which may be a hybrid annuity. Maybe it's going to take $90,000 to get paid that lifetime income stream of $5,000 year by year by year. But on the back end, you have control of that actual $90,000, and you could essentially step up in income on an annual basis depending upon how well the market does. And if whatever you do not pull out of your actual account, let's say if you turn on $5,000, well, you understand that there would be $80,000 left in that bucket if the market crashed every single year because you have a 0% floor. Your beneficiaries would be able to receive the full $80,000. As opposed to with the single premium immediate annuity, your beneficiaries receive nothing. The insurance company wins. So that's why, with all the information that I try to tell you guys, it all comes down to leverage. It all comes down to what exactly are your goals? Do you have specific income gaps? Is your plan that you're doing right now, is it working perfectly? Do you make sure that you have your specific coverage, that you have your safety net put in place, that you have different things such as a legal reserve structure in place, making sure that these companies are safe, that the contract is very safe. Are there specific income gaps? How exactly can we show you different strategies on how to accomplish those income gaps? Can it be used through an annuity? Can it be used through different safe money programs as different safe money strategies to accomplish that goal to get from point A to point B successfully? And it's all about leverage. It's all about how can you use the smallest amount of dollars possible to get you there, to get you the most optimal result. Because if you could throw as much money in liquid cash, that's where you're going to win every single time. What do I mean by that? Well, if you have this individual that had $100,000 in liquid cash, but then everything else was on fixed income, such as the Social Security and his pension, and he didn't have any other assets over there, well, how exactly can we push that limit? How exactly can we leave this person $60,000 of pure liquid cash, leaving it in that money of just a rainy day fund, an oh my gosh moment, whatever that is, and leveraging the smallest amount, in that scenario, $40,000 that they could accomplish their goal on. So it's all about how exactly can this individual control the chips at all times, but how can he leverage the company the right way without having the company leverage the individual? And that's one of the things that we really try to specialize on. And this is why we have a lot of national recognition. It's because of our methodical process. We try to educate people. We do it through the form of videos. We do it through the form of different types of literature pieces. However, that individual likes to learn. But we ask them a slew of questions. When calling into our office, we offer 24/7 customer service. You can give us a call Saturday, Sunday, whenever it is, and you'll be dealing with a specialist. Depending upon your specific situation, you'll be dealing with a specialist, and that specialist is going to help you out. It could be myself, it could be one of my other representatives, but we're going to try to help you understand what some of your options are. Whether or not a single premium immediate annuity could fit within that balance. But because we are an independent agency, we offer every carrier in your area, every strategy in your area. With each individual, we average about a little over 1,200 different scenarios per individual, and then give them the top 3 recommendations based upon those scenarios. So we're going with a fine-tooth comb with every single situation, making sure that with precision, your recommendation is going to be the best possible recommendation in your specific area that you have access to. We are A+ rated on the Better Business Bureau. We've never had complaints. We've always had really good reviews, and it's because of the way that we do business. This is your retirement. This is a very serious matter. You could have a lot of fun in retirement. Everything could be great, but you have to take the proper steps to get there successfully. And this is why I try to create as much free content as possible. I try to educate you guys, but when calling in, you guys will have a more detailed analysis, more detailed plan, and I know that you would truly love the process in dealing with myself and dealing with my company. Once again, please call the 1-800 number, 1-800-566-1002. My name is Derek Afasi. Make sure to subscribe to our YouTube channel for the most updated videos, and I want to thank you very much for watching this video.